your savings are being reduced by inflation every year. So therefore, you want to buy gold. So that's gold, crypto, technology stocks tend to do very well in that environment.
Hello and welcome to Wealthy Value. In today's video, CEO of Real Vision, macro investor and cryptocurrency expert Raoul Pal updates on inflation, recession, and cryptocurrencies, including Bitcoin. Raoul gives an insight into Bitcoin's price action and how inflation will hit different sectors of the economy. He also talks about chances of a capitulation event and when will the next phase of crypto revolution begin. Make sure to stick around till the end of this video, where Raoul Pal gives a macro analysis of financial markets and why things are looking ugly for Bitcoin right now. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
No, and I've sent out a few warnings. I did the warning on Real Vision about this as well on the daily briefing last week, saying, listen, this is an ugly market. What I think is going on here is there are two factors for the market to digest. One is inflation, and that created the market to set up in certain ways. Everyone's crowded into certain themes. Then growth starts evaporating. You can see it all over the place, stuff like consumer discretionary stocks. You can see it in the forward-looking indicators. And so the market has to deal with inflation plus growth. And what that's basically mean is everyone's hit the liquidate button. So everything's getting liquidated. This is the correlation of one style markets that I was warning about. And it hits everything from crypto to pretty much everything. And the thing that stands above all ends up being the dollar, because that is the kind of safe haven. Dollar today's had a slightly different day. We've corrected some of the move, but we've seen some huge moves in the dollar, and I'm not sure it's entirely done yet. So there is a massive liquidation going on as people struggle with their portfolios, because basically whatever position you've got, it's wrong. There's plenty of institutional buyers around. There's plenty of people setting up, as I say to people. It all takes time, and people are coming slowly into the market, but this macro backdrop's not helping. So you just kind of have to tough it out. I mean, that's what this thing is all about, right? Crypto is all about that. Bitcoin itself, using the monthly logarithmic chart, I think it's pretty close to 2 standard deviations oversold now. It's never really been, it never really goes down much further than this versus its logarithmic trend. So we're kind of in that zone, but that's what we're kind of saying anyway, which is, 30,000, at worst 20,000 would be, the final bloodbath level. Who knows? The idea of this space, if you're looking at network adoptions, I don't trade the space, I never have. I just look at it and say, I want to own the long-term trend. The long-term trend of adoption is going higher. I see no reason to change that narrative whatsoever. So you just keep dollar cost averaging. Looks like crypto, as I said, is going to get hit further, and it's going to come a bit lower down. And I think it's still within the broad range that we've been in since March. And I think that's okay, because it looks like the networks are pretty stable, i.e. network growth is stable, they're not falling, they're not growing. It is what it is. That narrative turns around if the inflation narrative and growth narrative turns around. If not, they're just weak within this big sloppy range. And I don't see anything to change that yet. Like no instant event. There's plenty of events on the horizon that can change that. There's at the margin, the Bitcoin physical ETF, if and when that comes, ETH 2.0 merge, if and when that comes. There's a bunch of things. There's interest rates falling, if and when that comes. All of these kind of things will start changing narratives within crypto. Meanwhile, crypto is basically just a churning of the same capital within the crypto ecosystem. So capital that was going to leave is left. So it's a churning of capital, which is where NFTs have been a place where people have made money, because that's within the ETH economy. It's a separate economy. It's outside of the US dollar economy. Right. People tend to go into the ETH system and don't leave. And so they tend to look at NFTs or DeFi and other stuff and rotate around. And that's what's happening now. Anybody who thinks they know the outcomes is lying. We're all trying our best to figure it out, because there is a lot of moving variables. Now, am I generally in the right direction or generally in the wrong direction? These are the two schools of thought that are out there. And, that's why I'm really looking forward to the next 2 weeks, because I've sat down with some unbelievable people and asked friends of mine to go and sit down with some other amazing people. So we're going to get as many views as we can to try and piece this all together. And after 2 weeks, I don't think there'll be one answer, but I think people have a better view of what's really going on. Nobody really talks about price. Everybody is in the build phase. It's really interesting. So crypto goes through two phases. One is price, when everyone talks nothing but price. And then when the price or the network kind of is less interesting, people focus on building. Now, crypto companies raised 32 billion in VC last year. So everybody there is seeing what's happening in tech and everything else, and they're immune to it. Now, the crypto token prices might go down, but they're immune to it in terms of their businesses. So what they're allowed to do, they've timed it perfectly in the capital that they raised, is they're able to now, they've all got the capital they need to build the next phase of the crypto revolution. And they're all working hard. I met everybody from people building out derivative marketplaces to NFT stuff through to, the people at Solana building out all of the future of Solana network. All of them are there, all of the building stuff. People like FTX, awash with cash, building out the future of the entire integration with TradFi and DeFi. So fascinating, and people are breathlessly exciting. I mean, it was literally like speed dating every half an hour, another meeting, another meeting, another meeting, another meeting. Yeah. Because people are so busy and everyone's trying to partner with each other to do so many things. So when you look at that, 10-year bonds are currently at whatever they are, 2.9%. That's roughly in line with where 10-year inflation expectations are. So i.e. real yields are zero. Real, in a structural economy where we've got an aging population, massive debt, all of this stuff, you tend to see real yields negative for extended periods of time. Europe has been that way for a long time, as has Japan. So what it's telling you is as real yields have got to zero, we've kind of choked off the economy. In a more functioning economy like India, real yields can be positive, i.e. yields more than compensate for inflation. But in these kind of aging, mature, indebted populations, it tends to be the opposite way around. So what you need for gold wants to see an environment where money's being debased and therefore real yields, financial repression is underway. Financial repression is a way of saying that your savings are being reduced by inflation every year. So therefore you want to buy gold. So that's gold, crypto, technology stocks tend to do very well in that environment. These are very important markets, and this is a very macro environment, and it's very, very important to understand what it is. Yeah. Now, if I'm right, and that the inflation story is going to change and growth is going to go slower, then we start shifting into a dynamic where we question what the central banks are going to be doing, and if bond yields are going to come lower, stuff that's been really beaten up, like the further end of the growthy stocks, they should be more interesting in that environment because they got killed by inflation. I think gold does pretty well. It's, interesting enough, gold and growth stocks tend to do badly as real rates start tightening, but they got to zero and it looks like the world's falling apart, just as the central bank are trying to undertake quantitative tightening or at least no QE. And if that's the case, then real rates are going negative again, if I'm right. And that's usually good for gold, crypto, long end of growth, that kind of stuff. And bad for everything that people have been in, like commodity stocks.
So what do you think is the reason behind Bitcoin clinging to $38,000 mark? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.